All right, sure. Ready to make something like ooh, let's see, maybe ODJPY. Okay, yeah, go one or something. Hey, maybe let's almost close to TP this one. Well, this one I entered it all the way here, and it's still going down. I mean, this swing trades, you will hold them. Since last week, still going down. Let's see. Okay, it was a very good trade. All right, sharp. So let me just remove everything. Let me go to the daily. I want to show you how this order block thing works and how do you to use it to your advantage, in terms of taking profits and everything. So
Yes.
so you're going to first look at your you remember what we do again? Looking at your swing highs and the swing lows, ne? Your highest high
Yes, I
and your
remember
highest. So
those.
I have this, the highest high being here of this wave. Okay. So this one of order block, it is going to refine how we used to do things a bit. So now, when you have identified this highest high, ne, let me just change this trend line, horizontal ray. So now, I guess so you have identified the highest highs. Yeah, you've identified the highest highs and the lowest lows. So now from there, you need to check.
Yes.
Okay, sharp. You have your structure here. You can see it's a descending structure, and I don't need to draw it. The descending structure, and then okay, impulse correction, impulse. Then if I come here on this structure here, ne, this one, I want to show you this. I want to show you the examples first. So this structure here, let me just pull the brush. So in this structure here, ne, you can see that the market was coming up, impulse correction. It was in an uptrend, ne? Impulse correction, impulse, and then this impulse failed to break this high, ne? And then after that we had an impulse to the downside, ne? After that we had an impulse to the downside, and then this impulse here broke the lows here. Or what? This impulse, it broke these lows. So when this impulse breaks the lows,
Yes.
it means that now it signifies that we might be ready for a change in trend. Ne? It means we might be ready for a
Oh.
change in trend on Frustan. So it means that now we're going to be looking for sell positions on Frustan. So in terms of an order block is let me show you what an order block is. An order block is the last. If let's say you see this is the whole impulse. This is the whole impulse. Eh? This is the impulse. So on this impulse, the order block is the last. If it's going down, it's going to be if it's selling, it's going to be the last bullish candle before a strong move downwards. One swat. So if it's selling like this, it means that it's going to be the last,
The last bullish.
the last bullish candle before a strong push to the downside. One swat. So if it's going up, let me just get an example for when the market is going up. If the market is going up, let me just get one which was retested. Yeah, okay. So if the market is going up like this, you see, the market is going up like this. So if the market is going up like this, what you need to check, where is the volume? The volume is here. You can see that this is good volume. Ne? And then it broke what? It broke these tops, meaning that this market is going again, is going to push higher because this is a higher high now, right? So this market started, this move started from this
Yes,
order.
I see.
So the order block is this one here, which is the last, it's going to be the last red candle before a strong upward move. Y1. So that's why, let me just do
So
this.
that one is what? Is a bearish candle.
Yes. For an upward move, it's going to be the last red candle or the last bearish candle before a strong impulse. So after this impulse, after this impulse, we were anticipating that this order block here, it will be retested, and this is where we will buy again. So this is exactly what happened. You see, when the market came down again now, you see, second touch on this exact order block, and then
Then you
up,
buy again.
yeah, and then up, and then down, again, testing
you
the
buy
order block.
again.
And then after this is going to give you, see, it gave you a double bottom or a W structure from the order block. From the order block. So from that order block, now we know that when the market comes here, we'll be expecting buy movement. So this is what will happen. And then yes, we got that buy. So now after this buy, I want to show you, after this buy, the market broke. Let me just remove. After that, this market here, see, this market here broke structure. It broke structure, this previous structure. You can see that this price, it broke these tops. So
Yes,
if
I see.
yeah, so after it breaks those tops, you look at the momentum of these candles. You look at the momentum of this candle. Where did it break these tops? So when you check here, you can see, okay, the high volume here on this move, it's somewhere here. It's somewhere here. Somewhere here. So we have this order block here. And then we have this order block here. So
yeah, I can swear.
So now what happened was, let me remove everything. Remove drawings. So what happened was, you see, the market broke these tops here. So after breaking these tops here, we know that the market is most likely gonna come back and retest this order block. Because look at this. These are the higher highs. So this market here, if you check, it broke this on the lower time frame, and then it continued going up. So this is where the volume is. This is where the buyers are. This is where the buyers are. That's why after breaking these tops, the market came back down to retest those buy positions, and it took those buy positions. So if you are taking this buy position again, your TP was going to be where? At the top of what? Of this structure here. So it means if you took this buys here, your TP was going to be at the top of this structure here, because of this move.
Okay, I see.
Because of this move.
Because of movement.
Yeah. So
so your TP has to be the last highest high.
Yes. So if we're in an uptrend, your TP will be the last highest high. But if we're on a downtrend, then it will be the last lowest low. So let's take it for the downtrend. Let's go on a downtrend.
And then I see you have the first TP and the second TP. So which one is that?
Okay. I'll come to that. I'll show you how. How do you get there? Okay. So basically what happens is, let me show you. Why do we have first TP and second TPs? We have an order block. You see, we have this order block. Okay, we have this order block here, which was retested, here. So with this move here, you can see that there is a lower low here, right? Broke, and then lower low here. So when this upward movement starts to happen, the first thing that it's gonna do, when it gets to the first lower low, it's going to retrace. So that is your TP1. That will be your TP1. And after this retracement, this is where what? You can enter another trade. scale in, you can enter another trade. So if you had taken the trade here and then TP1 here, it is your TP, and then here you can enter another trade here, ne? And then when you enter this trade now, the market, boom, then your TP2 is this one. This will be your TP2. This will be your TP2. And then after that, it goes up, retraces, and then goes up. Your TP3 will be the last. This, you see, there's an order block there. See this? That's your order block. So that's your
see
last.
the order block.
Yeah, that is the TP. That is the TP, because you can see what happens when the market go to the order block. It retraced again. It went down again once more before continuing going up. So that will be your other TP. And then here, on terms of stop loss, it means if you were only holding one position from here, when the market does this, it goes up. And then if your TP, you only had one TP, which was here. When the market goes up like this, okay, sharp. And then when it start going down, you don't panic. You don't panic. You don't panic because it's going down. You can see it went down for almost 3 days. This is a daily market. Ne? This is a daily structure. So it went down for almost 3 days. 1, 2, 3. But we don't panic. You don't panic. So for you, if you are holding a position that you entered here or here, ne, then you'll be waiting to push your stop loss to here. And then when you push your stop loss to here, it's another entry. And then it goes up and then it retraces again. So this is another entry. Ne? It is giving you more entries on those order blocks. On those order blocks, it's giving you more entries. So your TPs were now your TPs will be these order blocks, which will be on the left. Which will be on the left. Which will be on the left. So if the market is gonna go up, it cannot go up without taking out these order blocks. So whenever it gets to these order blocks, you will see a reaction. Whenever the market gets to these order blocks, you will see a reaction. That's why that is your take profits, because anything can happen from these order blocks. The market can decide to come here, and then decide to go down. One. So that is why you must take your profits, especially for intraday traders. One. So if we're going to these order blocks, now let's go to the downward move. Now we're dealing with the upward move. Let's go to the downward move. So if you check here, ne, we have this move here. It gave us a lower low, okay, and then after that it went up, higher high. Okay, we can say, okay, from here the market is still bullish. Here the market is still bullish, ne, because it gave us new highs and it gave us higher lows. And then after that, this market came down and it broke this structure, right? It broke this structure. So when this market,
when you say it broke, it means it went past the previous highest low.
Yes, that's when it broke the structure.
Oh.
So it broke these lows here impulsively.
I see.
So when this happened, we go, okay, sharp, on this wave now, on this wave here, where are our order block? Where is our order block, and which one's going to hold, right? So remove drawings. This is going to be, you see, this is going to be your first order block here, because remember what we said. If it's in a downward move, the order block is the last bullish candle before an upward move, ne? So you take the whole candle.
Yes.
You take the whole candle like this, ne?
Yes.
You take the whole candle like this. You give it. This is the opening, the 50% and the close of the candle, ne? So on the 50%, it is where most likely that the market will go back and retest and continue going down, ne? So you can see that here on this market, you see, again, we are talking about this wave. So on this market here, this order block was retested here. If I go to the lower time frame, I want to show you. Where is my market? Okay.
So go fast. There it is.
Let me just wait for it to load. Okay, no problem. Either way, we will use it. We'll get to see it when we go to the actual strategy, how to use these order blocks. Okay.
Okay.
So now, when you look at this move here, this candle here retested this order block, 50% of it. Once what? It retested the 50%. So that's why the move continued to go down. And then now, after it broke these lows again, now look at this. After that, this move, it went down. And then here. And then here, it broke the lows. Ne? It broke the lows here. It went down, it broke the lows. And then here, it left again. There is an order block here. There's an order block here. There's an order block here. You see, there's an order block here. So after it broke these lows, it came where? Down to it came up to retest what? This order block. And look at it, it took about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. It took about 2 weeks for it to, you see, to retest this order block, 2 weeks. But you see, the move from here to down took almost just 1, 2, 3 days. So it means that the move is to the downside. So we got a retest of this order block here. Let me just remove. So we got a retest of this order block here from this move here. So after that, this move went down. It broke the lows. Ne? It broke the lows. And then it left an order block here. Ne? It left an order block here. So this one here, it's a, if we go to the lower time frame, we're going to find, you see here, there is an order block. There's an order block. So this is a lower time frame order block. So if you go to the lower time frame, when this price broke down, let me go to the 4 hour. What was this? It's like it doesn't want to load this history. What?
The network, as a network.
Yeah. Okay. All right, no, flopless. Either way, we'll still move. Okay. Okay, so this whole move, ne? This whole move, which is this impulse, ne? Which broke these lows, ne? What did it do now after breaking these lows? Imagine someone could have came and sell it here and say, no, it's gonna sell to go to hit this TP. Yes, this is the TP, but where are you going to enter? That's the question. So what you basically had to do was to wait. You see, you wait after breaking the lows. After breaking the lows, remember it left an order block. Ne? So it broke the lows and then went up to retest what? This order block. Yeah.
I see.
One thought. So we retested that order block there in the form of what there? A double top. So we got a double top in the order block area, which gives us what? A sell position here. So if we're going to, let me just, if you're going to enter this this position here, you're going to target the first this lows, and your stop loss was just gonna be here. Over. Your stop loss was just gonna be here. One thought. It was your stop loss was just, that's why I get a sniper. Sniper. That's why I'm saying sniper, sniper. Because your stop loss
Yeah, okay, go on.
over. Your stop loss was just gonna be here. Yeah. So look at the risk to reward. That's 20.2. Let me show you something. That's 20.2 risk to reward, ne? And this is only the daily. This is the daily. So on the H4 time frame, it's even more than this. On the H1, it's even more than this. So I just want to show you the calculations, how this one would have taken it. Wealth management pro. Let's say your $200 account is there. Then the stop loss here, it's
Yes.
24. Is it 24 pips? Yeah, it's 24 pips. Stop loss is 24 pips. Of course, on the smaller time frame, we were going to get this to 10 pips. 10 pips, I'm telling you. On the smaller time frame, this stop loss would have been over 10 pips, somewhere there. So after this stop loss of 24 pips, the target here is 488 pips. The target. So if you
It's a sniper.
yeah, it's a sniper entry. So if you're using an account with $200 with this stop loss and this target, you were supposed to use a lot size of 0.2. The profit was going to be $976, and your stop loss was only going to be $20.
Yo.
From Frostan. Just this one move.
Yes, yes.
Because after all, remember this move is impulse, correction, impulse. And then now, correction. So let's just go further now. We saw what that happened. It broke this lows. Okay, now corrected. And then after this correction, there's a correction here. There's a correction there. And then on this correction, again, it broke what? It broke the lows. So after breaking these lows, there is an order block which this price left here. It's an order block here. So when you check, this price broke these lows, and then it came back. Where? Where did it came back to? To the order block. To the order block.
I see.
It came back to this order block, ne? And then after it came back to this order block, look at the flash. This was then they say they will say this is COVID. This was during the COVID. Which yeah, is this the December? Yeah, January. Yeah, the COVID drop. It's the COVID drop. So look at the structure, and then the news about COVID came in, which were supposed to push the structure to what? To break these lows. because you can see that already the structure broke these lows here, and then we expected a retest of this here, and then it took about almost a year to say, because 14 August until 4 December, almost 6 months. This move took almost 6 months. But then from here, 3 December, from here up to here, it only took 1 month. From up here to here, it only took 1 month. So you can see why we don't want to enter in this correction.
Yes, I see.
You see, we don't want to enter in these corrections. But if we can just get these moves, that's what we want to see. That's what we want to see. So after it left that other block, when it broke out, now it broke out here, and then we have this other block here. And so the market broke, and then it left this other block, which is yet to be retested, this one. So after a break of this here, we're expecting that the market will come and retest here, but instead the market just moved around. So we are still expecting this movement to happen, and then a continuation down. So when we go further, okay, and then it broke out, ne? It broke out of this one. So we know, okay, sharp, it broke out, but then we still have another order block here. What did I put? Remember the main order block, the one for this move, and then this one broke.
Yes.
This one broke here, and then it left an order block here. Yeah. So it should be here, somewhere here. Should be somewhere here. Yeah. And then we have another OB. Everything makes sense. There's an OB. There's another one. This is the first one, the top one. This is the top one. So when you check an order block like this, let me show you something. If you have, like, you see from here to there, this one like this, if you go to the weekly structure, you'll find that it could be only one candle. Where's that thing? You see, this is what I wanted to show you. See, this is the weekly, ne? So if we're starting to draw order blocks from the weekly, you see, it's there. And then we had a move down. Now we had a move down, broke this loose, then it left an order block there. And then after that, we broke this loose, and then there is an order block here. Or let me just do this. Okay. Just want to show you order block there.
Are we on a 1 week structure?
Yeah, 1 week. And then from here we broke these lows. We broke the lows, and then after breaking the lows, this is the big order block. Okay, it came back retested, it was broken here, came back. So this is the order block here. You have an order block. The big one is here. You see. The big one is here. And then we have this one here, which broke structure. This is the latest one. So I can just circle this in like that. And then after that, we went down. We went down, and then you see order block retested, broke structure, and then there's an order block here, which was left. It's another block here which was left, and then it broke down. Order block here, break again. It left another order block, and now we're going forward. So it left another order block here. So now when this price came to this, you see, this will be your first TP. So what you basically need to wait for now, as you can see that, you can say that your trend is going to change, ne? To change direction. So you see the market has been creating these lower lows, lower lows, lower lows, lower lows. And then all of a sudden,
Yes.
all of a sudden, all of a sudden the market went up, created this, it failed to come and create another lower low. That's the first direction. And then after that, it went up and then it broke the previous lower lows. Ne? It broke the previous lower lows, which then created a new higher high. So that's another indication on SWAT. So it
Yes.
broke this and then created a new higher high. All right. So this means that now you can see, okay, your trend is
Yes.
starting to change. You're starting to have a change in trend. So when you're going to enter, when are you going to enter this market? This is the order block here. And then your first target of this, when you enter here, your first target would have been where? This high is here. So when you buy here, one, your first target this highs, and then you have again now this order block when you check on your left on top. So this will be your TP2, your TP2. And then now we have this order block here, which is left, which will be your TP3. Ne? So you can see that this market here broke out of this order block. It broke out of this order block, and we still have this order block up here, which needs to be retested. Still have that order block up there, which need to be retested. Let me just. This is a very nice order block. Okay. All right. So now, if you hold your your trend line, if you take your trend line, yeah, just the way we used to do it, we do it. You take your trend line from that lowest order block. You see what we have? We have 1, 2, 3 touch. Yeah?
Three
Yeah.
touches.
Yeah. And then now for this trend line, let's make it twin. We just clone it. We just clone it and get a twin for this trend line. That is the twin for this trend line. So we have 1, 1, 2. We're expecting what? At least a third touch. One touch. So you can see we have this touch here. 1. We have this one, 2. We're expecting what? A third touch. And where's this third touch? You can see it is at our order block. It is at our order block. Now, After having your structure like this, you can see what kind of a structure it is. We have a rising wedge structure. Ne? We have a rising wedge structure. So structurally, this market must still go up a bit to there. So let's go to the daily time frame now. So we are expecting a move like this. This is where we anticipate. We're expecting that this market here will go to here. And then some news or something will come up. Some news or something will come up. And this market can flush all the way here. This market can flush all the way here. So you'll see some major news will come up. I don't know when. So this one is somewhere around October. I don't know when, but some major news will come up this year to drop the markets, to flush the markets. You'll see. So, okay. After this move here, all right, let me just highlight also this area. Highlight this area here. I'm just highlighting this previous order block, this order block here. So this was this order block here, the buy order block. So you can see still being respected so much. It's respected so much. It was the last order block, yes, being respected. So this move can flash from here. It's possible. So let's go to the daily and get more information. We'll go to the daily to get more information about this market. All right.
Okay.
So here on the daily, there's our market. We have this beautiful impulse up. You can see this beautiful impulse up. This market broke structure. This is the order block. It was retested here. Then the market continued going up. Yeah. So after that, let me remove this. Okay. After that, the market went straight up. And then now we have this. This is the peak of the market. This is what I call the peak of the market. I don't want to confuse you here. This is what we call week of distribution. This is what we call week of distribution. This is where, because the market makers, this market is going to drop. So the market makers, basically what they do is that they cannot put all sell positions. They cannot put all the money in one sell positions, because if they do that, they're going to crash the market on first start. So they must distribute the money. So you'll find that when it's like this is what they will do. They're going to sell here.
Oh, I understand what you mean.
Yeah, so they're going to sell here maybe 50 million USD, and then it drops. They want to kill retail traders. So they're going to sell here maybe 50 million USD, and then the market corrects, it takes out everybody, and then they come here again. Now they sell, let's say 80 million, and then from there it goes down, it leaves an order block here, and then it collects everyone's money, and then from here they sell the remaining. So if they wanted to sell 200 million, this is how they do it: 50 50 100. They would distribute it like this. So this is what we call a week of distribution. This is what we call week of distribution. This one will confuse you, this one, but you just need to know when the market is there at the top and you see something like this. It happens in all time frames. It happens in all time frames. You must know that we will be expecting a reversal anytime from the market.
Oh.
Let me just. Let's go to the now. Let's go to recent price action. Okay. So in recent price action here, we already have the bigger time frame bias, which is sell. So here on, when we get closer to the time frames here, when we zoom a bit in, Okay, we can see that where's this rectangle? The market impulsed down, and then here there's an order block. Yeah? The market impulsed down, broke these lows, broke these lows, broke these lows, then again ultimately broke these lows. So we are going down. So there's an order block there. So I just go to the 4-hour chart. This is how this move was caught. I just go to the 4-hour chart. When I go to the 4-hour chart, I'm just going to refine my order block now. Ne? I'm just going to refine my order block. So you can see this whole area. This was the order block. Ne? This was the order block from the what? From the daily time frame. But you can see that on the 4-hour time frame, what the market has done here, on the 4-hour, it went up, and then you see it went up, and then it broke the lows here. See? And then these lows were ultimately broken, and then it left an order block there. You see, this is the 4-hour. So now we are just going to refine our order block to get the sniper entry. So now our order block is here. Because we can see on the 4-hour we have a new structure forming. Lower lows, the price is starting to form lower lows. Welcome to the NASDAQ Ghost Robot. Plug and play. So, welcome to the NASDAQ Ghost Robot. Let me just do this. Plug and play. Let me just do this. So the market is starting to form lower lows. So after that, this whole candle, the whole candle. After that, when the market was forming these lower lows, it broke out, né? It broke out, and then it retested here. And then after that, we were expecting that this market, I shared this analysis somewhere last week. This market will come back to retest this order block. And then after that, what? Continue to go down. Remember the higher time frame. What we said on the higher time frame. You remember, you're still expecting a move to the downside. So we're expecting that this move would come back to that order block, retest it, and then continue down. So let's refine the order block again. Let's go to the 1-hour. I want to find that sniper entry. So when we get here to the 1-hour now, when we get to the 1-hour, our main focus is this wave and this wave. So if I hold my trend line from this low, like this, and then I just clone this, give it a twin, and so on. So you can see my structure is an ascending channel. Then now, here on the 1-hour, let's look, where is this? You see, we have this big order block here. Now we have these two structures. So now we're going to check now. This is my order block here on the 1-hour. We have a new order block here. And then now for this wave, we're looking for that sniper entry. So already we can see, remember, this is an order block. This is an order block. This thing here. See, this is the order block.
Yes, it's an order block.
Yes, it's an order block on the bigger time frame. So if we take almost the 50%, remove this, I just do this with so if I can just take this, the 50%, it's most likely where the market is to, is what you call it, retraces, ne? That's most likely where we enter the trade. So on the order block. So on the order block, on the 50% of the order block, that's usually where you'll get this sniper entries on the 50% of the order block. So our 50% is here.
I see.
Somewhere here. So if I take this and measure it from these lows to this, this swing eyes here like this. That's my 50% of this order block. So that's where I drew that line, that's where I drew that line. So on this structure here, the structure is coming up, it retests. Remember, the order block starts there from here. So from here, this whole area, you will be expecting that the market will give you a shift once more. So it can be here, it can be here, or it can be here once more. So it can be here, here, or here, but it is going to shift. It is going to shift back because this is where the market makers have placed their orders. They are waiting to take out all the retail traders. That is us. They're waiting to take us out, and then they continue with the market. So now when we get that reaction, or when the market went up, and then here it started to stall. It tried to impulse. It did not impulse. Okay, sharp. Now we see the market now. Let me go to the smaller time frame again. $15. So this is the 15 minutes chart. This is the 15 minutes chart. So you can see just here, there's a double top formation here on this M15 chart. There's a double top formation. The market broke out. It defeated these lows. Why what? It broke these lows here with this move. See this move, it broke these lows, which gave us the first signal that the market is going to reverse. So after it gave us this, there is an order block here. I don't know if it's visible. This is where you get the sniper entry. You have to go to the lowest time frame. Can even go as low as a 1 minute, bro. So there is an order block here. Let me just change its color so that it can be 15 minutes. You see. So the market broke these lows. It broke the lows. It broke these lows. Then after that, it came back to this order block. So if you go to the 5 minutes or 1 minute chart, on this area here, on these two spikes, the moment this
is a 5 minute chart.
Yeah. So the minute this price went up of the order, out of the order block area, and it came back in fast, this will be your sell position here. It went out of the order block, it came back fast. This will be your sell position here. So if I even go to the smallest time frame, you're going to find structure there where we drew. So it's all about top-down analysis. You have to start from the highest time frame and get the buyers, and then go to the lowest time frame to get your sniper entries. So me now, 15 minutes is my lowest time frame that I go to. So there.
15 minutes, ne?
Yeah. So this is the 1 minute chart. The same price. Yeah. See, it went up. Then we had a strong move. And then after this strong move, we had this up. And then we left this order block here, which was tested here. So if you were going to enter this on the 1 minute chart, this was going to be the entry, short position, entry. Then the stop loss, you can just put it here on the last order block, this one. And then let me show you the target. When we go for the target, we go for the higher time frame now. When we go to the target, we go to the higher time frame. Where's that thing?
The higher time frame is 4 hour.
Yeah, it can be 4 hour, it can be 1 hour, it can be, but as long as you can see the structure clearly. It can be any time frame which is at least 3 times bigger than your entry time frame. I wanna there, the take profits all the way here. Let me just hold the 4 hour. Where's that market? Yeah, let me just zoom in like this. See, this is the move. This is the move. You see the move here. When you take profit being here. So the same thing applies. The same thing applies. If you're going to be holding this move, you can see, look at the stop loss there, 2 pips. 2 pips, because you went to the 1 minute time frame. You see, on the 1 minute time frame, you get 2 pips. So on the 15 minutes, you'll get 10, 15 pips at least. So I like the 15 minutes because it gives a little bit space to breathe. But if this was your trade and you were having a stop loss of 2 pips and your take profit, it's the take profit here will be 200 pips. Yeah, 200 pips, 210 pips, and then 2 pips, 210. So you are going to enter with a lot size of 1. You're going to enter with a lot size of 1. And the profit is going to be $2,080. And the stop loss will be $20. You understand? That is how strong this order block is. So you see, so if you had at least 15 pips there, with 15 pips with good risk management, then you're going to make $277 with the 15 minutes time frame. Same move. You first start, same move. So if someone is having 5 pips stop loss, that person will make about 800 on the same move. If someone is having about 20 pips, that person will have to make 208. Same move. Same move. So it's about going down to the lower time frame. The lower time frame will give you more information. It will give you more information. So usually when we send a trade out, let's say for example, let's say GBP odd. You remember I sent this, I think yesterday. I sent this yesterday. See, already running good profits. So already this market is at break even. My stop loss is already here. One shot. My stop loss is already here. So I'm already in good profits. My stop loss is already here. And then I'm just waiting for a shift. I'm just waiting for a shift of this market so that it retraces a bit. And then I put my stop. So if I go to the 4 hour, let me show you the take profit. The first take profit is here. You see? So this is the take profit. And then we have another take profit level here. So if from here, we know that from here the market can decide to go down because of this structure that we have on the bigger time frame. If I zoom out on the bigger time frame, you see, we are still waiting for this market on the bigger time frame. We're still waiting for this market to go down.
Yes.
Sorry. On the bigger time frame, we're still waiting for this market to go down. But that's why it does not mean that we know that this is the direction, but inside here, there are trades that you can take. There are trades that you can take. So we have this trade. We have this trade here for us intraday traders that we took. Ne? We have this trade that we took here.
Yeah.
We have this trade. You can see it created a nice, it came down.
I see.
It came down in an ascending structure, and then it gave us a nice inverse head and shoulder formation. It gave us a nice head and shoulder, inverse head and shoulder formation, and it went up. So impulse correction,
Yes.
impulse correction, impulse. So we're expecting to hit our take profit target there. Let me just go to the 1 hour. See, this is the order block on the 1 hour. You see, I have an order block here. You see, so if I can. So this is my first area of target. Inside somewhere here, 50% somewhere here. This will be my TP. And then again, if we break this structure, if this market continues, then because I'm expecting that it can come here to this, come here, and then continue to sell off. So this is how you can anticipate. So in this market movement here, we can see that we had this impulse correction, impulse. We're trying to impulse out. We are not yet out here. So if we come back here and we play around here, it's a move down. After all, we have this order block here which was formed on Frustan. So you must always be, yeah. You must always be anticipating in the market. Don't guess. There's no guesswork. There's no guesswork. You must always be anticipating on the market. So this market broke these tops, created new tops here. So we're expecting that this market might give us another impulse to the upside, or if it comes back in here impulsively, so let me go to the 5 minutes. If it comes back here inside impulsively, so correct, it will go down. But I don't think that's going to happen, because you can see it broke the tops very nicely. The only thing that it can do, if it's going to come down, it can only come down to test this order block that it left here. Can only come down to test this order block that it left here, and then continue with the move to the upside. That's when we'll be expecting that this market will then reverse. This one is I missed this move. Okay, no problem. So what are this one? This one is straightforward. I like this one because it's straightforward. I want to show you. Okay, we had an impulse, broke of structure. Okay, then here we had an impulse, and then we broke this structure here, this volume. This volume came back to retest this order block. We went back up. We're still expecting that this order block here formed another order block here. Okay, I missed that one. So it came back to that order block. It retested it. It created new highs. So now we're expecting at least, if, because usually if the market is like this, if we have an order block here, this is like an area of accumulation. So if we have something like this, usually the market will come down here and test this order block before it goes up. If we have an area of accumulation like this, and then underneath you have an order block like this, a strong order block like this, the market usually comes down to test this order block before it goes to the upside. After all, you can even see the structure of this market, what is going to happen already. You can see already what is going to happen in this market. Let me just do this. You can see the nature of this market, that it looks like a head and shoulder formation that is going to happen.
Yes.
So when the head and shoulder formation happens, remove drawings. This order block. Then we have this one. So which one is going to hold? Ne? This one. I think this one is going to hold. So how do I know which one is going to hold? Which order block is going to hold? It's this one. Already it has been tested. You see, it has been tested, this order block.
Yes.
Yeah, that's what I'm saying. I just missed it by a bit. But then to see if it's going to hold this order block, we must check what happened after this order block. We must get a strong volume or strong shift of the market whenever there's an order block. That is when you know that when the market comes back down to that area, we are most likely that the market will retest again. So if you check, let's say something like this, you had a strong impulse up, ne? You had a strong impulse up, and then on this strong impulse up, the last candle, which is this one, you see, it came back to be tested, and then up, we broke structure, right, via this move, right? So this move, we still have a lot of areas that need to be covered before the market goes up. So we had this impulse. So this market here, it can do this, come down correctly. So Oma next week, somewhere there, can get this move on this one. We can get this move all the way to break these tops here. Can get this move all the way to break these tops here. Oh, gold, SL. Yeah, Mara, I'm still expecting this to buy from here. It broke the lows now, which is a good thing. It was an early entry. No, it's a good thing. It broke the lows. It's a good thing. Broke. It broke these lows. So my next order block here.
I see.
I have this area here.
So the entry here will have to be a buy.
Yeah, we're looking for buy entries. Yeah,
But
most
it has to
definitely.
retest.
We're looking for buy entries. We're looking for buy entries. So it can come here. It can come here. And then after this,
Yes.
it will go up. We're still looking for buy entries. We're still looking for buy entries. Yeah, I'm still looking for buy entries. I'm most definitely.
This is gold, isn't it?
Yeah, this is gold. I'm most definitely.
It took us out, Mus.
Yeah, that's why I'm saying it hit SL. This one hit SL.
Oh, because I see already the way.
Broke the lows, broke the lows. Still have some liquidity here. Let's see what will happen. It's gonna come here, bounce. Still has an area to cover before it completes the.
So you don't think it will come up to those the highest lows?
It still has to complete this move. So it cannot complete this move without going up here.
Oh.
It can't complete this move. So it has to go up somewhere here and then complete.
Then come down again.
This correction and then come down from here. And then from here, we'll get this big W formation. We'll get this overall big W formation. onward.
Mm,
Already we have this
mm.
W formation here. Now we are waiting for this overall big W formation, and this big W formation, this is the one that is going to make us rich. This one, because once we buy this one, we'll take profits next year. I'm telling you. Once we buy this one here, we're going to take profits next year. I also need to status bargain, you know.
Are you serious?
Uh, US oil. This oil, man. It looks like it's getting ready for a nice movement also. Okay, so this is oil. Start on the daily.
And you also have oil.
Yeah, because it looks like it's gonna promise soon. This one. Let me just go to the weekly.
And then on the broker oil, king.
US oil or something. If it's not US oil, it will be WTI oil. Okay, so sharp. This is the overall structure for oil, ne? This is the overall structure for oil. Impulse correction, impulse correction, impulse correction. We're expecting another impulse. Already we can see. We're expecting a down move. And this down move will be completing this overall
Third touch.
yeah, it will be completing the overall structure. Let me just check something here. Okay. Let me just check something because we might have had that third touch already. Let me check. 1, 2, 3. Okay. Yeah, we had 3 drops. We've had 3 drops. It's fine. We're not gonna have that third. Okay, it's gonna come down.
Or even on the horizontal line, we still count it third touch.
Yeah, it's gonna come down either first. It's gonna come down here, and then do this, and then here, and then from here, this is where it will continue going up, because after all, this market, from what I'm seeing now, it is still very bearish. It is still very bearish. Still very bearish because I can see there's still these lows here. Then now we are here. So if I can just take my structure to this latest price action and remove this, remove everything, then I just check the order block. Here is the order block. Here is the order block on the bigger time frame, and then the lowest low, and then the structure for this, what happened here. You can see what literally happened here. It's not as beautiful, it's ugly. It's an expanding structure. 1, 2, 3, broke out. So we're still expecting, we're still very bearish. Now let me just put this, yeah, clone. Yeah, now we have 1, 2. We're expecting the third touch. And the third touch is on the weekly order block there. expecting the third touch. So now just going here to this, we just have to find structures within structures. So on the daily time frame, we can see what we have. We had an impulse. Now this is just a correction. And already we know this area here, the market is going to reverse. So we're expecting a reversal anytime. 50%. Yeah, somewhere there. And look at this, 75.71. 75 is a significant number. So expecting a reversal anytime. If it does not reverse here, it's most definitely going to reverse up there. Because the way it's going up now, you can see that this market, because as you can see how strong the impulse, but then now it's just start to correct.
I see.
It's just start to correct. Small candles, low momentum candles, that's a correction. We're expecting a move to the downside. We're expecting a move to the downside, a very big move to the downside. You saw how gold fell, ne? The same thing that happened to gold is going to happen to oil. The same thing that happened to gold is going to happen. Yeah, the same thing that happened to gold is going to happen to oil. So it's still going to drop so much. So you just need to know your order blocks.
So if you know it's still going to drop, why now you're not going for a sell?
You don't just enter sell. That's the thing. There are ways to enter. There are ways to enter the sell. You know what you are expecting. You're expecting this. You see, you have your 1, 2. You're expecting the third touch here. You're expecting the third touch. So you're expecting this. So if you are anxious and you just enter, you cannot be taught that one. You can't be taught how to be patient. So you just need to be patient.
Okay, understand.
Yeah, you can't be taught how to be patient. You just need to learn how to be patient. Because if you have a structure like this, and you can see your structure like this, you just need to wait. You just need to wait it out. You can put a sell limit here. You can put a sell limit here. That's the best you can do. You can put a sell limit here. Yeah. You can put a sell limit here, knowing that when the market touches here, it's going to go down. Or if you just want to look at the market, you can look at the market, and then when it comes here, you just press enter manually, and then it sells. And this is going to be good money.
I understand what you mean.
This one, if it doesn't happen, this one, I'm expecting it to happen maybe on Friday. You know why on Friday? There's NFP on Friday.
NFP.
Yeah.
NFP, yes.
Yeah. So when there's NFP and you have a market structure like this is going to be a very good structure for a sell position. So don't rush the market. Relax. Don't rush. Relax. This market will give us a lot of, you see, because you can see that here we have a reaccumulation. So if this market give us this VA trade, ne? If it give us this, let's say today and tomorrow it give us this, it's fine. We relax. We know that after a year, what is going to happen? It will come down here, give us this, and then it will leave something here. It will leave something like an order block on this whole move. There will be an order block where on this order block, you know, when this market does this, it's preparing us. So when it comes here back to this order block here, that is when we're going to sell 100 or sell 1 million. And then it goes down because now we have the confirmations. So it's about patience. So this is the daily chart. So it won't happen anytime soon. So if this one we catch it, you can see it's also gonna take some time. See, it can go up there about the 5 July, 7 July. It's gonna take some time for it to drop here. It can take up until next year, January, 2022. It can take up until next year, January, or even further than that. or even further than that, because you can see this move, for it to come from here to here, it took almost a year, 8 April 2020, and then here 30 June 2021. It took almost a year. But for it to come from up here to down here, because this will be the impulsive phase. This will be the impulsive phase. It's going to take less time than how it got to this area
Yeah, I
here.
understand what you mean.
It's going to take
So
less
you mean
time.
you can hold a trade for months?
You need multiple. That's why it's good to have multiple accounts. You need accounts that will allow you to what you call, to hold the trade, ne? And then after that yeah, after that you can have two accounts, and then you'll use that one account, and then the other one will be for day trading, the other one will be for long-term trading. Yeah, so you can see even on Eurocad, the structure is beautiful, setting up nice. What I'm just waiting for is an order block test. Let me just go to H4 and find an order block. Yeah. Okay, there's this one here. Why is it hiding? That's the order block which made this move. Because from here, this will be the take profits somewhere here. Yeah. Huh. Okay. So you see, you can see what we have here. Let's isolate this structure. My trend line, clone. I have this. My 1, 2, 3 touches are satisfied, or I can start it from here to there. So from here, you can see, all right, again, you'll have your structure like this, drawn like this, right? You know that it's an ascending channel. So now you want to know, when do you enter this trade? So you can see at the bottom of the ascending channel, we started to form an inverse head and shoulder, né? And then on this inverse head and shoulder, right here, on this impulse candle, even this one is, it looks like it's the simplest of them all. Horizontal. Horizontal ray. Boom, just like that. So it came directly here to our order block. It tapped in. Look at the sniper. It tapped in here. Impulse, correction, impulse. We're still going up. We're expecting that this move will go up until at least this area there at the top. That will be of your take profit. But in the meantime, when it's going up, your other take profits levels.
So now we're looking for a buy position.
Yeah, we're looking for a buy position here. So the other take profit levels that you're going to get will be these order blocks from your, I'm just going to put them in so that you can see. Let me just change color. Yeah. So this will be the levels that your take profits will be at when you see these levels. So if you want to swing this position, you can swing this position from here to here, knowing that it's going to break, retest. Just do this. gonna break your first TP, retest, continue, then have this, and then continue, then have this, and then continue, and then up there, that is when we'll be waiting for the overall price action. So we don't want to put all this because it just makes the chart to be a lot messy. I'm sorry. So what question do you have? Maybe you can just ask me something and so that we move.
Now for now I'm fine. You're covering a lot of things.
Okay. Let me just check something. Oh. Mara gold is not that bad. It's not that is bad. Because I'm expecting a buy now. Anytime now. Anytime. It's not that
Hey,
bad.
mona umputse ka sniper entry, mona. I want that sniper entry. I want to master that.
And German 30. German 30 now, it looks like it is. Let me just check something. Let me just go and analyze this. I'm still very sell bias. The order block.
Oh, my phone is on 3%.
Oh. This one is giving us another entry.
Yeah,
I want you to enter this one.
okay.
It has given us another entry.
Oh,
This one of German 30.
so you want me to enter it as in like now?
Yeah, it has given us another entry.
Sell position, ne?
Yeah. Sell. That one, use lot size of, you were using that one lot size of what? 0. Let me just check.
That one, it was giving me a 0.10.
Yeah, you must use lot size of 1. 1.
One.
1. Yeah, 1.
Is it? Oh, okay.
Yeah, or you can use 0. Let's use 0.5. Let's not be great. Let's use 0.5. Yeah.
Okay.
Let's use 0.5. So the stop loss here,
0.5, ne?
yeah, so the stop loss here you enter now is 15792. I'm also entering this one again because I already have this one.
15792.
Yeah, 15792. Let me just enter another one because I already have another one which is running here. 50.
It only gives me a minimum of 0.10. Or you mean 0.5 or 0.50?
0.50. 0.10 times 5. 15789. 15789.4. Then the take profit 15267. 15.
Oh, 0.50. Then I go for sell, ne?
Yeah, 15267.
I can go for sell.
It's a big sell.
15792.
Yeah, it's gonna be a big sell. So just enter 0.5 there. Put your take profit there. It's gonna be a very big. It's gonna fall. Yes, yes. It's gonna fall this one. Let me just take a sniper entry.
So you say 0.50.
Yeah.
Network emphasis. And then give 15792 stop loss, ne?
Yeah.
And take profit.
Take profit is 15260. Where is it? Okay. Yeah. Let me just share this in the group.
Okay.
This one is going to fall, my guy. This one, you know what? Enter 3 of those positions, man.
Three of these positions.
This one is going to fall, but enter 3 of those positions. This one is going to fall big time. This one is going to fall very big time. It's going to fall. Man. 30. It's going to fall, chief. It's going to fall for days. It's Dex, eh? It's Dex state, yeah. It's going to fall for days, this one.
Okay, 0.50 again.
Yeah, I just put 0.5. Yeah. Make sure it's well managed. And then, yeah, I'm just going to leave them running. Because if it breaks this order block, the next order block is just on top there. So the stop loss is very tight. I like tight stop losses. Because if not, I don't want to put a stop loss like this, because this is the ultimate stop loss here. Yeah. So instead of putting a stop loss here, now I will wait for it. If it comes to this top, I'm going to enter another position.
Okay.
If it comes to this top, I'm going to enter another position. Let me just check my transactions. Yeah. Okay. No. Let's leave the markets now. Let's leave the markets and then yeah. Let's leave the markets and then we'll see what will happen. Now let's stay away from the markets and we'll see what will happen. I'm expecting a big drop here. I'm expecting a big drop. It might complete during NFP also. It might complete during NFP.
I need to charge my phone, Alex. I don't know.
Yeah, no, I'm done either way, so it's fine.
Okay, then we'll talk.
Sure.
All right, thanks.
Sure.